Hello, friends. So, you guys know we are once again in that time of the year where Congress and Senate try to figure out new tax policies, how it's going to impact every single one of us. And you probably have heard the term big beautiful bill, where Elon Musk don't agree with that and said that, hey, look, it can be either big or beautiful regardless of which side of the politics you are on. But the truth is, no matter what happens, is going to impact all of us, whether you're Democrats or Republican. So today, I want to have a quick discussion with Sanjeev ji as to what we can expect from this bill. We're certainly going to talk about this in great detail in our mid-year tax planning webinar that is happening at the end of the month. So if you have not signed up for that, just go to sanjeevcpa.com and register for that webinar. We're going to talk about that in great detail on that webinar. And obviously, in a couple of months, things will become a lot more clear. Maybe some provisions will pass, some might get amended and whatnot. So by the end of the year, we will have a lot more clarity. So we're going to talk a little bit more about tax planning aspects of it during our Wealth Summit that is going to happen in November. So that's the plan for now. So Sanjeev ji, welcome. I hope you're ready for an exciting 2025. It has been rough ride so far. So what do you think? Where are we going? We have all this conversation around deficit. We have debt and tariffs, and now the tax policies. Where are we going?
As we know, first of all, good morning to all of you. So, as we all know, when President Trump become president, we know that this term will be something very exciting, challenging, confusing, and unreliable term. So, we don't know where these things are going to head, how this 4 years will go. Maybe the country will prosper more, or the country might go down. So it's like a politics. We don't know what's going to happen in that area. But like you said, one big beautiful bill that was passed in the House on May 22nd, 2025. It contained a lot of provisions, a lot of things. Again, it's not detailed out, a lot of things. Still, they have to pen it down to the details. The Senate has taken will be talking about this bill this week. And hopefully this bill we will come to know more as things come by. Hopefully that this bill will be passed in Senate by month of July, August. If things goes by, if not, then we'll see how things goes about it. But you can see in this one big beautiful bill that was passed, you can see the effect of Trump, the President Trump on this. For example, I just want to give an example here. There's Trump accounts in that one big beautiful bill. What is this Trump accounts? It's like creating a new tax advantage saving account for kids under age 8, and the limits are $5,000 per year, adjusted for inflation. Plus, there is a $1,000 credit for to Trump accounts for U.S. citizens born from 2025 to 2028. So, just want to give a flavor as to how these things are happening. Even in taxes, we create a different kind of accounts, and we are giving $1,000 credit for kids born in this period from 2025 to 2028.
Yeah, so all of a sudden, all the people who had kids few years ago, now they are complaining. We should have waited.
Now, again,
Look,
we don't know what this is going to be there or not. Like we said, the one big beautiful bill is going to add $2.4 trillion to deficit. So we don't know
I
what
like
can
the
happen.
idea. I really love the idea that every citizen that is born in the country, they start out with a savings account. One thing which I was surprised about when I read about this bill is that the kids are allowed to take this money after, I think, age 18. Like, it's not like they don't have to really hold on to that money till retirement. They can use it for school, they can use it to buy a home, they can start a business. So in one way, you can say, hey, it's a great way to do savings. But the other way is I look at it, I mean, the whole point was, how do we solve challenges with retirements, medical, social security? But I think if we just, age 18, somebody gets like $15,000, $20,000, what do you think those kids going to do? So I don't know. I'm not really sold on that bill just yet.
Yes. So let's talk about a little bit on the bill, right, for individual taxes. So are we ready for that one?
Yeah, go for it. I think uh,
Yes. So one big beautiful bill, like I said, we have to understand this clearly that this whatever has been passed in the Senate still has to be modified. We still have to get more details on this one, and still has to be passed through an approval process in Senate. So we don't know what we don't know right now, but what we know, what has been passed, as it relates to the individual taxes, what we know is number one, the income tax bracket. The Tax Cuts and Jobs Act created an income tax bracket which was beneficial for all individual tax filers. It created it saved at least like in the brackets percentage it saved at least 3% for each person. In the higher bracket it saved around 3.5 2.5%. So roughly that the bill contains this provision that individual tax rate, the income tax rate will be permanent. They want to make it permanent. So it's anyway we are going through we all are used to this brackets. Uh, of course, this was temporary. Think about it. If this bill was is not passed, we're going to see a jump in the tax rate by at least 2% to 3% in every bracket. So, so this is one thing which is very important in that bill is they're going to make that tax bracket permanent. The estate taxes exclusion, we were thinking that there will be no estate tax exclusion, but the state tax exclusion is permanently increased to $15 million. That's going to be increased to permanent. So there's no confusion with respect to whether the state tax will be there or not there. Now they want to permanently increase it to $15 million. So that's starting in 2026 and inflation adjusted going forward. The standard deduction, that was also important provision in Tax Cuts and Jobs Act. We doubled the deduction for a lot of tax filers, individual tax filers, but that was temporary with Tax Cuts and Jobs Act. They want to retain it. The same thing for 2026. They want to retain that one. They want to retain the same thing permanent for with the Tax Cuts and Jobs Act. In addition to that, any person with age over 65, they want to add $4,000 per person. So remember, the President Trump wants to talk about no tax on Social Security. So they want to give that benefit of $4,000 above the line deduction. Means they want to give a standard deduction of $4,000. Of course, that additional standard deduction, like any regulations, will be phased out. Their income limits, for single filers and married filing joint. Like married filing joint, I know is around 150K to 200K. So this additional $4,000 is available for people over age 65, irrespective of whether they do standard deduction or itemized deduction. So it's a way of giving some benefit for people who are claiming Social Security. Additional $4,000 benefit is given for that one. Itemized deductions, same thing remains the same, but in case of itemized deductions, the most important area is SALT limitation. We are living in a state of California and New York where the state taxes are very high, the property taxes are very high. With this bill, what they're trying to, we know that we have a limitation up to $10,000. With this bill, they're trying to increase that $10,000 to $40,000. Of course, there's certain income limitation, and anybody making over 400K, they will see the decrease in the deduction, the increase in deduction. But again, we are waiting for details in this account, how this is going to work out. And if you have a S corporation and LLC, and you're using a pass to entity elective tax, which is workaround for overcoming that limitation in states like California, New York, New Jersey. In fact, about 40 states have taken those workarounds. If you have those workaround and you get this benefit of additional deduction, sort limitation, increase in sort limitations, then you cannot take that pass to entity elective tax deduction, which was earlier allowed on the federal return, will not be allowed. if you take that benefit of increasing deductions. So that's one thing which is going to be, we have to watch and see how things goes by. We don't know, but as the things go by, we will know what things come by. We have to see that how does it plays around with the salt limitations. Uh, so the other thing, if you have a sole proprietor business, if you are running a business as an S corp or LLC or as just a sole proprietor, the QBI deduction, we have a qualified business income deduction. This was also introduced in Tax Cuts and Jobs Act. And that in the Tax Cuts and Jobs Act, the QBI deduction was 20% of the business income, subject to the 20% of taxable income overall, provided there are certain limitation where is SSTB, which is specialized skill trade or business, or non-SSTB, non-specialized skill trade or business. In that case, if you are a specialized skill trade or business, their limitation up to 300, I think 394,000. It will phase out 100,000 from there, like 494,000. It will be total phased out. But the deduction was 20% in the Tax Cuts and Jobs Act for SSTB. The deduction right now has been increased from 20% to 23%. In case of non-SSTB, the same deduction is increased to 23%. But in case of non-SSTB, you can play around with the W2 income and how much asset you have in those businesses. So so again, the QBI deduction, they want to make it permanent. So earlier it was temporary. Uh, Now they want not an increase it from 20% to 23%, but they want to make it permanent. So that's also very important changes that happen. Uh, the child tax credit, always, whenever some changes happen, the child tax credit is always some increases we have seen over the years, but they want to make the child tax credit the increase of $2,000 permanent. Again, Tax Cuts and Jobs Act provided temporary, but now they want to make it permanent. They also want to increase temporarily by $500 this credit to make it $2,500. Again, it will go out in 2029. The 529 plans, as we know, you can use $10,000 for higher education, but there's a provision in this bill which allows you to use it for elementary and secondary also for that 529. Charitable contribution remains the same. Charitable contribution, no difference from what 30% to 60% depends upon which one. But in addition to that, they have added a tax credit of $5,000 for contribution to charitable organization that provides K-12 scholarship. And like we talked about the Trump accounts, well known. So we talked about the additional $5,000 for kids under age 8. Uh, and the Qualified Opportunity Zone Funds, QOZ, Qualified Opportunity Funds, QOF, sorry, QOZ is that Qualified Opportunity Funds do invest in Qualified Opportunity Zone accounts. So in the case of Qualified Opportunity Funds, which was introduced in Tax Cuts and Jobs Act, it was going to be lapsed if for this is the last year for qualified opportunity funds. What is qualified opportunity funds? If you have capital gains and you defer that gain by putting that money into qualified opportunity funds and keep it for 10 years, the growth in those funds will be tax free. This was supposed to go by 2026, 2025, but this bill has provided more benefit for people to invest in those funds. Uh, there's a provision that if you put it for 5 years, if you keep invest for 5 years, the 10% basis, the 10% of that growth will not be subject to taxes. If you keep for 10 years, of course, this growth will be tax free. So this is what the main features of this bill are. Of course, this is a lengthy bill. Like I said, it's a lot of pages, but that's the main focus for the individual tax filers.
So, like I said, guys, I mean, if you want to really better understand some of these provisions, do attend the webinar. Hopefully, things will become a little bit more clear by then. So if you have not registered, just go to sanjeevcp.com and register for the webinar. And then obviously, we're certainly going to talk about this in great detail at the Wealth Summit that's going to happen in November this year. So same place as always, Oasis Palace in Newark. So we will make those tickets available pretty soon here as well. But Sanjeevji, thank you so much for keeping us updated on these tax provisions. I know another, exciting year, I guess. For some people, this will
Well,
be
it's
awesome.
a year, a lot of changes we can expect. Yes.
Yeah, so I think I think this will be another. Once things become a little bit more concrete, I think there will be plenty of opportunity to do tax planning. So if you if you haven't really not done it for a few years, I would strongly recommend that you set up an appointment and really see how all of these things fit into your picture. Whether you have kids, whether you're planning on retiring, buying properties, investing. What kind of W-2 income looks like. So this will be a great year to look at all that. So thank you so much, guys, for spending last 15, 20 minutes with us. And we'll look forward to seeing you next time, hopefully on the next webinar.
Thank you.